right now, the move in the silver juniors isn't fact-based.
Yeah.
It's moved around silver in the anticipation that the stocks will do well.
Yeah.
For it to become real, the market is going to need to see a bang-up quarter out of Hecla, or a bang-up quarter out of Core, or better yet, both.
Yeah.
A bang-up quarter out of Pan American, and they're going to see that. It's important to note that most of the real silver companies are gold companies in drag. More than half of their revenues are gold, but they're still extraordinarily leveraged to silver. It's important to note too that while gold is not merely at nominal all-time highs, but probably in constant dollar all-time highs, silver is far from an all-time high. $57 comparing to 50 forgets the fact that 15 years has passed since the last time they were at 50. The dollar's deteriorated. My experience has been that precious metals bull markets are established by gold. It's the fear buyer.
Yeah.
And when the momentum in the gold price attracts generalist investors to the space,
Yep.
market leadership changes from gold to silver. This will be the fourth time in my life that this occurred. It looks like in the market that transfer is taking place as we speak. Whether or not that's true, of course, time will tell. When leadership transition does take place, silver outperforms gold pretty dramatically. And the high quality silver stocks outperform any other extractive asset class I know. I hope you paid attention to the part where I said high quality, though.
Yeah.
There are a lot of purported silver companies that litter the speculative landscape who unfortunately have no silver. Those can uniformly be expected to do well too for a little while, but they're treacherous places to be.
In previous bull markets, once gold establishes fear-driven demand, silver tends to seize market leadership with far more dramatic moves. We may be witnessing the early stages of that handoff now. Veteran investors point out that when silver enters its leadership phase, the metal often outperforms gold multiple times over, and high-quality silver mining stocks amplify that momentum even further. But caution is crucial. The sector is filled with companies branding themselves as silver stories without meaningful silver resources. While these speculative names may enjoy brief rallies, only genuine producers and well-capitalized developers survive the full cycle.
These are truly dramatic runs. And I'm not saying it has to happen. I'm just saying that 3 times before in my life it has happened. And I'm hoping at age 72 it happens to me one more time. But let me give you a couple of arithmetic stories to warm up your audience.
Okay.
I came into the business in the 1970s, the most dramatic precious metals bull market in recorded history. One little silver company, then Coeur d'Alene Mines, now Coeur, started 1970 at 10 cents and ended 1981 at $65. Now, I was too young, too dumb, too poor to pay attention. But in the little rally that we had in the first part of the decade of the 90s, I helped float 2 silver companies, one Silver Standard, the other Pan American. They went from 72 cents respectively to $45, 72 cents and 50 cents respectively, to $45 or $46 in the space of 6 short years. These are truly breathtaking moves. They are not to be done with money that you had set aside for a child's college education.
Yeah.
But they are the kind of moves that can take mad money and turn it into real money. We haven't had the type of move in the silver market that would allow the senior producers' margins to increase as dramatically as the gold producers have. The strength that we've seen in the gold market for the last 18 months has a lot to do with the fact that they're making so much money.
Yeah.
The silver guys haven't had that happen to them yet.
They must be getting close though, don't you think? Because-
You bet.
Silver's history is filled with extraordinary ascents. During the 1970s crisis, still the most powerful precious metals bull market ever recorded, small silver miners delivered life-changing returns. One producer rose from mere pennies to more than $60 by the early 1980s. Similar but smaller scale runs occurred again in the 1990s and early 2000s, where quality companies soared from under $1 to above $40 in just a few years. These moves are rare but transformative. They are not for conservative capital. Yet for risk-tolerant investors, strategic exposure during early stages of a silver cycle has repeatedly turned speculative funds into real wealth.
Only about 18% of primary silver supply comes from silver mines.
Right.
82% comes from copper mines or lead mines or zinc mines. One could say, as an example with Freeport-McMoRan, that their cost to produce silver is zero because their mining costs are paid for by copper. They just have to strip it out of the stream. The real silver producers, the Pan Americans of the world, the Fresnillos of the world, the Buenaventuras of the world, the real ones, are nominally $20 producers, but
So their margin now is almost 200%.
margin's good.
Yeah.
The margin's good. Now, it is likely, although not certain, that one of the ways that they got through periods of low silver prices was by producing at mine grades that were higher than the average reserve grade. That's a fancy way of saying they high graded. And that will impact their results for a couple of years going forward, because it is unlikely that they haven't picked the eyes out of some of the pockets they've mined.
That they're in at the moment.
So you have to deal with that.
Yeah.
Right now, the move in the silver juniors isn't fact-based.
Yeah.
It's moved around silver in the anticipation that the stocks will do well.
Yeah.
For it to become real, the market is going to need to see a bang-up quarter out of Hecla, or a bang-up quarter out of Core, or better yet, both.
Yeah.
A bang-up quarter out of Pan American, and they're going to see that. It's important to note that most of the real silver companies are gold companies in drag. More than half of their revenues are gold, but they're still extraordinarily leveraged to silver. It's important to note too that while gold is not merely at nominal all-time highs, but probably in constant dollar all-time highs, silver is far from an all-time high. $57 comparing to 50 forgets the fact that 15 years has passed since the last time they were at 50. The dollar's deteriorated.
Despite excitement surrounding silver, major silver miners haven't enjoyed the same margin expansion gold producers have experienced recently. That's partly because only about 18% of global silver supply comes from primary silver mines. The rest is a byproduct of copper, lead, and zinc operations. This dynamic keeps prices suppressed until demand decisively breaks higher. Leading producers are typically low cost, but many also mine substantial gold, giving them hybrid exposure. If silver delivers a strong quarter for big names like Pan American or First Majestic, institutional money could enter the sector aggressively, potentially triggering the next phase of the bull run.
As you know from earlier interviews, I love hate.
Yeah.
In 2021 and 2022, the junior silver stocks were hated.
Yeah.
I mean, truly hated. It was very clear to me at that point in time that Vizsla was going to be a mine. And nobody wanted it.
Yeah.
The consequence of that is I didn't just buy it, I bought a lot of it.
Yeah.
And so, I would suggest that in the silver names that matter to me, I've got plenty. I think arithmetically, no. But that depends on the individual and his or her time frame and their tenacity. I've become very patient and very tenacious, not because I don't wish for instant gratification, but because I've learned over 50 years in the markets that instant gratification is not on offer.
Right.
An investor who is prepared to stay the trade for 5 years is by no means too late.
Yeah.
Let's look at the arithmetic. 2 interviews ago, not the one in Zurich, but the one before that, we talked about the fact that I believe that over 10 years, the US dollar loses 75% of its purchasing power.
Yep.
If it does that, I would expect that gold would maintain its purchasing power, which means that over 10 years, I see gold in nominal terms between 3 and 4 times higher than today. In prior bull markets, once the crossover has occurred, once silver begins to outperform gold, the performance in silver is roughly double the price of gold. I'm not saying to you that silver is going to go 8 to 1. What I am saying is that a move higher in silver, from my point of view, is statistically extremely probable. If one looks at history too, the higher quality silver juniors outperform the silver price 2 to 1. So if you follow that arithmetic progression, what I'm saying is that there's a possibility, if not a probability, that over 10 years, a portfolio of high quality silver juniors could give you a 20 to 1 return. Your investors shouldn't think in their mind, Rick Rule just said that Amalgamated Moose Pasture Silver is going to be a 20 bagger. I'm not saying that. I'm saying if you follow the arithmetic progression, that there's a very good probability that a carefully chosen portfolio of high quality silver juniors has the potential for persistent and tenacious speculators to generate a life-changing event.
Mathematically, a powerful setup is forming. If the U.S. dollar continues losing purchasing power, something seen during the 1970s and now exacerbated by record federal debt, gold tends to preserve value by rising several-fold. Should gold triple or quadruple over the next decade, silver historically outperforms by roughly double that rate. Well-chosen silver juniors often multiply again relative to the silver price itself. This layered effect creates the possibility, though never a guarantee, of 10x to 20x outcomes across a full cycle. Patience is essential. Multi-year commitment, not instant gratification, has always been the real engine behind outsized returns.
What I said was that I expect that gold will maintain its purchasing power.
Yeah.
If the U.S. dollar lost 75% of its purchasing power, and the dollar maintained its purchasing power, that would suggest a 3-fold to 4-fold increase. It's simple math.
Okay, so potentially $8,000 to $12,000 gold.
Yeah.
Over a 10-year period.
I would be surprised over a 10-year period if the gold price wasn't measured in 5 as opposed to 4 digits. Markets are shaped by narrative, but investment decisions should be shaped by arithmetic. So let's look at 3 different pieces of math. The last period of major dollar instability in my lifetime was the decade of the 70s.
Yeah.
The US dollar again lost 75% of its purchasing power, and gold went up 28-fold. If you had told most people, myself included in 1970, that gold was going to go to $800 from $35, I would have accused you of smoking a then illegal substance.
Right.
You know, the second piece of arithmetic is simply that number, the deterioration of the U.S. dollar. We covered in a prior interview the debt owed by the U.S. government and the ability or the inability to service that debt. The inevitability that they inflate away
well, they have to.
their unfunded liabilities. So, you know, those are 2 important pieces of math. The third piece of math is this. While gold has performed in a way that you and I understand, most of the investment community still can't spell gold, despite the fact that it's a 4-letter word. It is very, 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 very underowned.
Silver may be entering a bull phase, but other commodities are undergoing their own psychological cycles. Lithium, once euphorically bid up during the EV boom, has now sunk into what industry veterans call the hate zone. Despite dozens of new discoveries, only a handful of deposits are truly viable, and markets currently treat good and bad projects the same. The same trend is emerging in nickel. If lithium processing technology struggles to scale, a significant supply squeeze could follow. History shows that deeply hated sectors often produce some of the strongest recoveries once fundamentals tighten and capital returns.
I don't.
You don't.
I think that maximum hate in lithium will occur in 2027 or 2028.
Okay.
The little increase that we've seen in the lithium price has given hope to the lithium market.
Yes.
And the market has to be hopeless for it to be hated. Okay. There's arithmetic around lithium too. Most people think we had a lithium shortage and that's why the price went up. That's wrong. We had a shortage of lithium processing capacity. In that so-called shortage, both Albemarle and SQM had 80 or 85 years of reserves. There wasn't a shortage of elemental lithium. When the price went up, people piled into the lithium market looking for lithium, and they found a lot.
Yep.
Probably 150 deposits. Maybe 5 are viable. So the investors in the other 145 have 2 more years to learn hate. I think we've done a very good job of debottlenecking
Yeah.
the lithium supply chain.
Yeah.
To the extent that treatment charges are falling fairly quickly. What will happen, I think, 2 years from now is that, first of all, the investment community won't segregate between 145 large projects and 5 lousy projects and 5 good ones.
Yeah.
That's what hate does. People hate lithium, so they don't segregate between good projects and bad projects. And you'll be able to buy the good projects at a bad project discount.
Yeah, well, we're seeing that with nickel right now, though, aren't we? I mean,
Absolutely.
it's
Absolutely.
incredible.
When that happens, with one caveat, if the technology around direct lithium extraction doesn't work or doesn't work well, then you're going to have a great game. I mean, a truly great game. You will have, as we had in uranium, as we had in silver, you will have $2 billion net present value deposits selling for $50 or $60 or $100 million.